So we are starting a new topic that is IFRS 8 or Ifrs number 18 on operating segments. So let's start from layman perspective. From layman, when you go to, for example, in the college, we have section 5, we have section 4, we have section 2, we have section 6, among others. These sections, they generate cash flows. And also there are expenses which are incurred. These sections to the college, they are known as segments. These are segments. So an operating segment is a section of a business entity which is capable of generating its own independent cash flows and even incurs expenses. So when they unasoma style gani, you know, put off your videos. They can expose you to but naelewa kuna watu wengi hapa, si peke yako. The 90% of people here wanasoma kama wamelala, so no problem. It is understandable. So these sections here are segments. They are capable of generating their own cash flows and also their expenses which are incurred. So for reporting purposes, utasikia Safaricom wakisema that this year we reported a profit of 1 billion. Pale Safaricom, ujue tuko na Fuliza, tuko na Mshwari, tuko na M-Pesa, tuko na all those sections. So how much profit of this 1 billion? Utapata kuna moja ilikuwa na loss. Na wamebebwa tu na hao wengine. We have made a profit. Tell us departmental operations. So this standard, IFRS 8 requires that apart from preparing the normal financial statements, can you also give us departmental reports? So giving us those departmental reports, that is a segmental report. Somebody may be asking, kwa nini kwetu sijawahi ona? Kwetu pale kazini, why don't we? I've never seen a segmental report. IFRS 8 is only compulsory for companies which are listed in the stock market. If you are listed, then you don't have any other way out. It is a must you give a segmental report. If you are not listed, then at your own wish, if you wish to provide, fine. If you don't want, perfect. So it is only compulsory for the listed. So what we want to check is how to prepare these departmental reports. And it is an accompanying report to the financial statements. So after you have prepared the P&L, the balance sheet, the cash flow, then this segmental, you give them as notes to the financial statement. So they're just attachment. They are not financial statements themselves. They are just a condensed, actually we call them condensed information. So if you told us sales is 100 million. This one gave us how much? Euro. So they're just departments, then we give reports. With that, we can go now to the notes. So let's go to the notes kindly. Let's go to the notes. Let's go to the notes. So to the notes, it says, an operating segment is a component of an entity that engages in business activities from which it may earn revenue and incur expenses. including revenue and expenses related to transactions with other components within the same entity. So revenue within the same entity is called inter-segment revenue. So you give us revenue from external and internal. Internal are called inter-segment. A segment should be a component of a business whose operating results are reviewed on a regular basis. Subtopic, reportable segments. Reportable segments. So IFRS 8 requires that an entity should only report on a segment if it meets the following criteria. So there are minimum thresholds which a segment must meet in order for you to report on it. We don't report on all segments. It must meet certain thresholds, and these are the thresholds. One, if its reported revenue, both internal and external, forms at least 10% or more of the combined revenue. So if you have these segments here, for you to report on this segment, its revenue, and when I talk of the revenue, it's the total. And total is both internal plus external. Internal are the revenue which they got from other segments, plus what they received from outside. So when you take their total revenue as a fraction of the total combined of other segments, it should be at least 10% or more. That is threshold number one. Number two, if its absolute measure of profit or loss is at least 10% or more of the reported profits. So profits or loss must be at least 10% of the combined. And let me clarify something. Kama the loss, your loss be at least 10%. 10% is considered to be material. It's a material loss. So watu wengine wanaangalia tu profit peke yake, hapana. If it's profit, let it be at least 10%. If the loss is 10% and above, also you need to tell the shareholders about that segment, because 10% is a negative material, so you need to report on it. And finally, if its assets are at least 10% or more of the reporting segments. So the threshold is on revenue, profit or loss, and assets. You carry out materiality tests on segment A. On revenue, it meets 10%. On assets, it is 6. On profit, it is 3. So what will happen? It only meets the threshold on 1. What will happen now that it is not meeting the threshold on the other 2? If the segment meets at least one of the threshold, then you have to report on it. So still lazima it meets all the 3 to be 10, 10, 10, no. If any of the 3, that is revenue, profit, and the assets, if it meets 10% threshold on any of those 3, then that segment must be reported upon. Correct. Somebody will ask me, what about those which will not meet? Zote ziko chini ya 10%. What will happen to them? If there are segment which is not meeting the threshold at all, then we go to the notes. So we read the notes. It says, if a segment fails to meet 10% threshold, its operations should be aggregated with those of other segments in order to meet the threshold. So aggregation means we bring it together. The first class which we did as just compressed. So let me keep it safe. So if a segment fails to meet the threshold in all of them, then combine it with those other ones which are also not meeting until they meet the threshold. That is what the standard requires. That if a segment fails to meet any of the threshold, aggregate it with other segments so that they can meet the threshold. If the external revenue of a reportable segment constitute less than 75% of the entity's revenue, then additional operating segments should be identified as a reportable segment, even if they fail to meet the 10% threshold of profit or loss. You're in another story. That one you just ignore. Advantages of segmental reporting. Advantages of segmental reporting. One, it provides a condensed information to the users of financial statement. And I want to very brief. It's a very small information, but which captures everything. You know, shareholders, not all shareholders are accountants. So wewe unaenda huko kwa AGM, umepea watu vitu ngumu, finance charge, sijui intergroup sales, hapana. Kuna watu wataki kusikia hiyo kitu. They want a very small information. How much was sales, assets ni ngapi, how much is profit. That's what they want to hear. And segmental report takes that into consideration. So it provides a very condensed information. It promotes accountability and transparency to the management. How? So that we can know which department is performing better. And even performance appraisal can be, actually performance appraisal is normally done based on these segments. Because we are just saying we made a profit. Which department performed how? So even for promotion, we can now do that based on the segments which are performing better to avoid some managers just promoting their girlfriends instead of observing which department performed how. So it's a good way of even carrying out performance appraisal. Then it is a requirement of IFRS 8 that all listed companies in the stock market should provide a segmental report at the end of each reporting period. Yes, it is mandatory. Unajua kuna kizungu kingine ilitokea the last 2 weeks. Ile kizungu ya may and shall. So this is mandatory under CMA regulations that all listed companies must provide. So by so doing, you are just complying with the requirements. Actually, it's a legal requirement and requirement of the standard at the same time. Limitations of segmental reporting. One, identification of primary segments for reporting purposes may be subjective. Hiyo kitu itakusumbua because usiangalie tu ati before. You know, segments are divided into two. We can have the internal segments and external. We may have Safaricom Kenya, Safaricom Uganda. So Safaricom Kenya, we can divide it in these sections of Fuliza and Pesa, what, those are internal. Then if we have Safaricom Uganda, Safaricom, I don't know where, those are also segments. We call them geographical segments. So for you to identify all those things, you do the materiality test, very subjective, time wasting, itakusumbua. Then it increases operational costs since segmental reports are considered to be additional information to the financial statements. The work of the auditor, you know very well the work of the auditor to express their opinion on the financial statements. So if you start telling the auditor, we also need segmental reports, perfect. We shall negotiate on that cost because that will be treated as a secondary responsibility of the auditor. So it normally increases the operation cost. Then it may delay the AGM since the shareholders may be interested on segmental information. See, I think they may, when I'm more interested, especially for the listed companies, shareholders other wasomangi financial, wanaenda huko mwisho. That is where we have the condensed information. When we are doing calculations, you will see how condensed they are. So on limitations, we have talked of identification is subjective. It increases the operational cost. It may also delay AGM. I've also given you the format, but we are going to discuss the format later. For now, I want us to rest with a certain question. So back to our past papers. So get out your past papers. Hii topic imeisha ni leases. So FRA, today is 22nd October. So get out your past paper. 2021, let's meet in 2021. I'm compressing this thing. Sent to the desktop. Yeah. Bas. All right, so to our past papers, I want us to check 2021, question 2B, September. I want us to check that question before we go to the formats. Before formats, I want us to go there. September 2021, question 2B. Daniel Mepata to tell us, to help us with the page. Whoever has gotten it, September, this is December. So September should be ahead. Which page? I have it. No, I don't have the page. Page 49. So September 2021, question 2B, page 49. Pass. Let's meet there. Open that question. And go through it. Good. So I read, it says, Tandaza Limited is whose equity shares are quoted on the National Securities Exchange. The group manufactures, distributes, and retails food products. Okay. The group also operates a hotel chain for purposes of diversifying its revenue. The group's financial controller wishes to know if IFRS 8 operating segments applies to the entity, and if so, what segments should be reported on. He informs you that the operating results of each of the division presented below are internally reported separately to the chief operating decision maker. The following information is available. So we have business, manufacturing, distribution, retail, and hotel chain. Revenue external, as you can see. Revenue internal. Internal is the intersegment sales. Profit stroke loss, as you can see. Then segment assets also there. Required. By applying the requirements of IFRS number 8 to the above information, explain which of the above business of Tandaza are reportable segments. 10 marks. 10 marks for advanced financial reporting. Because it will be easy. It's not something you know, something very serious. 10 marks. So to know the reportable segments, you are going to carry out 3 tests. The revenue test, the profit and loss test, and the asset test. Those 3. So in each of the 3, the one which qualifies at the 10% threshold should be reportable segment. So we start with revenue test. So write for me here, revenue. So for revenue, you will have business, you will have business, you will have external revenue, you will have internal revenue, you will have total revenue, and you will have the percentages there. Correct. So for business, we have manufacturing. We have manufacturing. We have distribution. We have retailing. We have hotel chain. Like that. I think I don't need light anymore. But really the natural light is around. So have that. Then external revenue for 60, 750, 150, 250, 4215, 3. So total revenue, I can help in the additions. So 460 plus 250, 710, 47, 765, 153. So give us the total. So 710 plus 47 plus 765 plus 153. That is 1675. So percentages, this is 100%. So I want you to 1, 2, 3, 4. Give me with commas. 10%, comma, what? So you take 710 as a fraction of the total times 100%. Can you give me the 4 percentages, chap? Who has the percentages? I can see Josephat and Joy. The JJs, 42, 42, 39. Wait, 42. We can round off 42. Then, 42.2, 0.4, 2.8, 45.7, 9.1. So, 42.4, 2.8, 45.7, 9.1. Thank you. That way. So now, you say, write down there and say, under this condition, under this condition, comma, we are only reporting on which one? Retailing. Manufacturing and retailing, those two. These are the ones which have met the threshold, those two. So under this condition, comma, manufacturing and retailing. Manufacturing and retailing are considered to be reportable segments. So under that condition, those two should be reported upon. Which condition? On the revenue test. So on the revenue test, manufacturing and retailing are considered to be reportable segments. Using it, we can combine. We aggregate areas. We aggregate distribution and hotel can be aggregated. But you cannot do aggregation at this stage. You have to carry out the threshold test on profit and even assets. So the ones which will fail in all of them are the ones to be aggregated. So you don't just test one, then you aggregate apart. I hope you are done with that. I want us to go to profit test. So be done with this. I know you are done. So under that condition, retailing and manufacturing and retailing are considered to be reportable segments. Let's go to profit stop loss. Let's go to profit stop loss. For profit stop loss, you also have here business. Here you will have profit stop loss. Here you will have the percentage. Have that one there. So business, we have again manufacturing. We have distribution. We have retailing. Don't write that other one for reasons which I'll tell you. So this one is 32. This one is 3. This is 75. You know, hotel chain made a loss. Hotel chain made a loss. So you don't offset the loss against the profit. Mtu anashindanga kutengeneza loss, wacha aende kwa shareholders wajue that this department is, I don't know what is wrong with that. That is what should happen. If he's making a loss, wacha ikae peke yake, watu wajue hii ndio inakuwa loss making. Sio ati wao pia wanakaa tu watu wakisema we have made a profit, wao pia wanakaa kwa profit. Wacha ijulikane wao wame loss. So the rule is when you read deeply into this standard, you don't aggregate or offset the loss against the profits. Let profits be alone. Then the one which has made a loss, we separate it with these others. So this one here, I will add. So that is 35. So that is 110. Copy at one risk. Then the one which made a loss is hotel chain. Hotel chain. Hotel chain made a loss of 14. Like that. So that is 14. So the mistake, I don't know whether someone has ever done that, but the mistake which someone can do is to take 110 minus 14. Segmental is to communicate to the shareholders what is happening in this company. So mtu anafaa make loss, wacha awekwe kando, ijulikane. Kwenye high school, primary, tukiwa class 7, tulikuwa tunawekwa kwa parade. Some of us went that, tunawekwa kwa parade. So sometimes it was not good to be uko katikati. Either ukwe number last ama number 1. Mkipangwa hivi, mzazi anakuja leta tu number 1 ni nani. Mtu yote ameanza huku na huku. So wacha watu wa loss wawekwe kando kama hao. So in percentage, those which are in profit making, express them as a fraction of 110. So give me this one here, the 3. This is 100%. Wait. This one also is 100%. So this is 14 over 14. They have made 100% loss. So this one must be disclosed. Ijulikane wao ndio kazi yao ni loss making. They are the only ones. So they made 100% loss. That is 14 over 14. Then the profit making, bring them separately. Please give me the percentages. Give someone as percentages. Bring some text here. 29.1. We have 2.7. We have 68.2. So in this condition, so next, under this condition, manufacturing, comma, retailing, and hotel chain. Are considered to be reportable segments. Are considered to be reportable segments. So the one examiner alikuwa naweka hapo kimakusudi ni hii ya hotel chain ndio ituangushe. You don't take profit, you subtract loss. What were loss watajificha kwa our profit. Separate them. So even if there were some losses, bring them together. Then you get the percentage of the loss. So the threshold of the loss matters. These people are making 100% loss. Tufunge ama tusifunge. Because segment is for decision making at the end of the day. Kwa hii segment, tunaweza tumika na competitors. Unajua inapeana nitty-gritties of what you are doing sometimes. Let's go to the last one. Assets. Assets. Hakuna materiality test ya liabilities ni assets pekee. They are only those to be profits, stop loss, revenue, and assets. So you will have it. Assets 1450, 250, 375, then hotel chain is 100. 100%. So you give me the percentages. Get the total, express, give me the percentages. So that is 66.7. $11.5. $17.2. Finally, 4.6. 4.6. Yes. So you say, ile kizungu yetu ya kawaida. Under this condition, manufacturing, distribution, and retailing. Those three. Under this condition, manufacturing, distribution, and retailing are considered to be reportable segments. So write that. All right, so now I hope you're done. So write their conclusion. Write their conclusion. So at the conclusion stage, watu wengine pia wataamua tu wafanye vile wao wanajisikia. I know all these things. Some people will say, sasa tuanze, there are 3 tests. Kwanza ya kwanza, ya pili, ya tatu. Then we check the ones which have qualified in all the 3. Then those are reportable. No. Provided, that is under Ifrs 8. Under Ifrs 8, provided a segment met 10% threshold on any of the 3 materiality tests, it must be reported upon. So if you check keenly, manufacturing actually qualified in all of them, retailing qualified in all of them, distribution has qualified here. I remember hotel chain where they made a loss. Hiyo lazima tupeleke mbele. Prefect, I hope mko, prefect wa high school. Hiyo lazima ipelekwe mbele kwa shareholders, ijulikane they are making loss. So you don't, a segment cannot be making loss alafu unaificha tunaenda kuaggregate. Unaenda kuaggregate ileta shida huko. So in this scenario, all the 4, in fact, write for me that way. Write that way. You say, conclusion, the entity should consider all the 4 segments. Should consider all the 4 segments as reportable segments. All the 4 segments should consider all the 4 segments as reportable segments under Ifrs 8. Under Ifrs 8. Kwa nini naipea uzito kusema under Ifrs 8? Because Ifrs 8 requires, provided any segment has met the 10% threshold on any of the 3 materiality tests, then it must be reported upon. So under Ifrs 8, you have reports on all of them. All of them met the materiality tests. Correct. Format. Class will end at 9 sharp. So don't worry, just mtakuwa mnapika chai usiku, mnakaa nayo hapo mnakunywa tukiendelea. So back to the notes. We want to check the format of a segmental report. So that is how you get the 10 marks. That's how you get the 10 marks. Yeah. So go back, we check the formats. So musichoke muniache hapa peke yangu. Tungangane tu. We don't have option. So in the format, we want to discuss it for the pollen. And the way it has been laid is how you should present it. So in the format, I've selected 2 segments and I've called them segment 1, segment 2, Evo 2, just for the format purposes. So segment 1, segment 2. Then before consolidated, there is something written there. What do you think huyo student alikuwa anaandika? Ni adjective or what do you think alikuwa anaandika? That ABJ. Ameandika hapo katikati before consolidated. Consolidated is the total. Some people will say total. Some people will call it consolidated. I want you to call it consolidated because you know, segment is for companies in the stock market. For your information, though watu wanaendanga hivi, wanachanganya watu na branch. They confuse people with branch to be a subsidiary. The rule is entity being listed should be group. In a group of entities. That is what also you should know. But sometimes we're part of single entity. But single entities, they allow for governmental institutions. But these private ones, watakanga group. So what do you think we students are cover? This thing stands for adjustment. So in some books, you will find it, some people calling it adjustments. Some people will just write elimination. Elimination. While some people will be calling it intersegment. Intersegment. So you mix any of those 3, there is no problem. For uniformity, I'll be using the word adjustment. But if you get a book where we make elimination or intersegment, there is no problem. So we'll have segment 1, segment 2, adjustment, then consolidated. Consolidated brings all the segments together. So revenue, you start with revenue. Revenue, huyo student hapo hajaandika vizuri. Hiyo kimeandika total sales ifai kuwa hivyo. It should be external. I don't know if you will correct. That is external sales. External sales is some books pia utaona wameandika sales to third parties. So third parties is the external sales. Then you add intersegment sales. Intersegment are the ones which they sold internally. So when you check intersegment, segment 1, segment 2, but before you go to consolidated, it is subtracted. All of us here, except none, must have done group accounting in section 3. Hata kama utasema ulipita kimungumungu, ulifanya group accounting. And if you can recall, in group accounting, goods which have been sold internally between the group members, we normally eliminate it during consolidation. Internal sale, in quotes, is not a sale. Sale is sales to outsiders. So before we go to consolidation, whatever was transacted internally must be eliminated in full. So that is what is happening here. What we take to consolidated at the end is the external sales. But intersegment, you have to tell the shareholders, this is what they sold internally, but you don't take it to the consolidated because consolidated per se, hakuna sale, ni nyinyi tu hapo ndani. So you add you add what was sold internally, but before consolidation, you subtract it. So consolidation, you take 0. Then we have what is called unallocated sales. Unallocated means it is a sale which is not attached to a certain segment. Ni sale to for the whole company. For example, Airtel, just an example, Airtel wako na booster, the network boosters. So they have network booster, for example, in Utawala, for example. So that one, it is a booster for the Airtel as a whole. Then they decide to sell it to Safaricom. Wameuza. They have sold that to Safaricom. So you cannot say at hiyo imeuzwa ni ya hii department. No, it was for the whole company. So if we sell an item which relates to the entire entity, we don't allocate it to a segment in specific. We take it to consolidated direct. So we call it unallocated. Then when you add external, internal plus unallocated, you get the total sales. Then we go to profit. We go to profit. Profit, you take operating profit. Operating profit is good to know. Operating profit is what you call in FM. You call in FM EBIT. EBIT stands for earnings before interest and tax. In financial reporting, we call it, we replace E with P to stand for profit before interest and tax. So when we talk of operating profit, that is profit before interest and tax. So you just give us for this segment, that one, total. Then inter-segment profit, because ulikuwa unauza internally, there must also be internal profit. So that one you will eliminate. Then you get to other items. So other items are now things like interest. Remember, it was profit before interest. So other items, you can have interest expense for the whole entity. Interest income you will add. Then you get profit before tax. So it stops at profit before tax. So you'll bring all the cash expenses, then you remain with profit before tax. Then we have analyzed revenue, we have analyzed profit. So you go to segment assets. So segment assets, you will give us identifiable assets. Identifiable is an asset which is attached to that segment. Is attached to that segment. Kama ni computer, equal that section. So those are the ones we call identifiable. Then we have unallocated assets. Unallocated assets, unapata pale job, hapo nje kwa corridor kuna photocopier. That photocopier is serving that section, wanaweza kuja wa print hapo, wa photocopy hapo, wale pia wanaweza photocopy or print there. So it is not to a specific department, so it is unallocated. So unallocate, all unallocated goes to the consolidated. Then after assets, you bring the system, which is liabilities. The same, identifiable, then unallocated. The same as assets. Then we are required also to provide non-cash expenses. And this is something I will elaborate on seriously. Non-cash expenses include things like depreciation, amortization, and impairment. You don't bring them here. Unaona uko juu kwa profit under other items. Other items, you only bring cash income and cash expenses. Non-cash is disclosed separately during presentation. You bring them separately during presentation down there. Then maybe I think that's good to capture. There is what we call, because it's not very common, capital expenditure. Capital expenditure should also be disclosed down there. They are the expenses which you incur to purchase non-current assets. So the amount you incur for the purchase of non-current assets, we call them capital expenditure. They must be disclosed in a segmental report. Ndio watu waone, okay, hii kazi yenu kununua malori kubwa kubwa hapa na mnajifanya ni ya kampuni na mnaenda kubeba nazo ndizi na umeenda mkiuza then pesa tuoni. So that is the segmental report. We are doing one question, then we close today's class. So the question we are doing is December 2017. December 2017, question 5B. So tukishafanya hiyo mna relax. Well, whoever gets the page, please bring it up. Page 102, Nancy. Here's November, December. Pass. I'm there. I'm right there. Part 1. Number 1. Hiyo number 1 ngoja kwanza. Ngoja kwanza nitume solution before to struggle. Hiyo tusome. So read required Roman number 1. So they are saying, with reference to the International Financial Reporting Standards IFRS number 8 on operating segment, outline 4 disclosure requirements for a reportable segment. So nimewatumia hapo, lakini sitakangi hata msumbuke na kusoma hizo vitu. Wacha niwaambie, then we can read for formality. Disclosure is what you need to tell us when you are dealing with a certain whatever. So what aspects are you supposed to tell us? So for segment, just comply with the format. Provided you know the format, you know the disclosure requirements. So if you check the format, you need to tell us about revenue, both external and internal revenue. You should tell us segment profits. You should tell us segment assets, segment liabilities. These are the basic ones which you should disclose. But non-cash expenses, you need to give us capital expenditure, reconciliation, you need to give us reconciliation. So, but these are the basic 4. And actually, I think those are the ones they want. But we can read the ones I've shared with you. Let's read the ones, check the book. Then we go to the part of computation. Number 1, general information on how the entity identified its reportable segments. Sasa hapo nataka kuuliza swali. Disclosure number 1, general information on how the entity identified its reportable segment. So which information, how can you tell us? How did you identify? How do we identify reportable segments? Someone must tell me that. We are going practical. Now that is practical. How do we identify? Because we are told one of the disclosure you have to tell the users, how did you identify segment X and you left out Y? Nikienda sana nitawambia answer. So which is this information about the identification? I want to see someone telling me something, even if not very structured, but at least something. What will you tell the users? Ile tu normal. Kama wewe uko hapa na wewe ni boss, utauliza ule mwenye amekuletea hapo kwa meza. How did you identify this one and this one? If you're the accountant, report now to the boss. Now I'm the boss. How did you identify those segments? Which spirit was guiding you? Kindly allow me to see someone saying something. Vera, it achieved the 10% or more of the threshold, correct? So you must, now when you put it to the users, you tell them this, the segments identified, the segments appearing above were identified on a threshold of 10% on revenue, profits, and assets. So that one you have to communicate. 2, information about segment profit or loss. That one we have said. 3, information about segment revenue, both external and internal, we have said. 4, information about segment assets and liabilities. So hapo tumecombine. Answers zikikataa unaziseparate. 5, information about non-cash expenses and capital expenditure about the reportable segment. So number 5 also you can separate. Those are 2 things: non-cash expenses and the capital expenditure. And 6, a reconciliation statement for revenue, assets, and liabilities. Thank you. Let's go to 20 minutes. I hope so. Let's go to Roman 2 of the question. Let's go to Roman 2 of the question. The following information was obtained from the financial records of Superfood Group for the year ended 31st October 2017. So we have consolidated income statement. So of course, consolidated for the group, P&L, as our eyes can see. Then consolidated statement of financial position, also your eyes can see. Additional information, for management purposes, the business is organized into 5, not live, into 5 operating segments: retail, catering, manufacturing, publishing, and others. So those are the reportable segments. Details of the operating segments are provided below. So revenue, total revenue, you can see. Total revenue. When I talk of total revenue, I'm talking of external plus internal. Appreciate that. Total means external plus internal. So we have the total revenue and inter-segment revenue. So the examiners denied. They have denied us the external. So external will be the total minus inter-segment, then you get external. Operating profit, as you guys can see. Segment assets and liabilities, as we can see. Number 3, inter-segment profit amounted to 4223. Required. Segment reports, as far as information provided above allows, according to the International Financial Reporting Standards, IFRS 8 operating segments, 10 marks. Now, there is something I've noted with this question, and I want to adjust that question. Mostly, though not always, when examiner amekupatia, wacha hiyo always talking, mostly, when you have been given the consolidated financial statements, there must be 2 required. 1, the segmental reports, and 2, a reconciliation statement. Because without reconciliation, I'm pretty sure you are going to ask me, then what was the need of those consolidated? Because the consolidated books will not be applied anywhere in segmental reporting. So you'll be wondering what was the purpose. So in my own thinking, what happened, we examined aliweka hivyo, na there was Roman 2, aliweka reconciliation. After amehesabu marks zote kwa hiyo paper akapata hizo marks zinafika 1 or 2. And marks must be 100. Akadelete hiyo 2 marks. Because reconciliation is like 2 marks. Akadelete hiyo reconciliation. But akawacha akasema wacha swali ikuwe serious, waone iko serious. So as we move to other questions, you will realize in other questions you'll be told to carry out reconciliation. More so when they have given the consolidated books. What is this reconciliation? You know, segment is condensed, ni kadogo sana. But the information you are giving here should tally with the comprehensive consolidated books. So to confirm our accuracy, we need to reconcile the segmental report vis-a-vis the consolidated financial statements. So add for me there 1, 2. So I'm just adding, lakini kwa mtihani isipoletwa utasema hii kitu inaongezwa. Roman 2, a reconciliation statement. Add there Roman 2 manually. A reconciliation statement. A reconciliation statement for revenue. A reconciliation statement for revenue. For revenue, comma, profit stock loss. Revenue, comma, profit stock loss, comma, assets, and liabilities. Correct. So we find it full. Wait. So we want to start the segmental reports. So right there, Roman 1, superfood. Superfood group. Segmental reports. Segmental reports. For the year ended 31st October 2017. So kama unaona unanyanyaswa huko job, nyinyi mnafanya kazi, wengine ndio wanakuwa rewarded. Nasema now for appraisal, let's do a segmental report. We see which department. Segmental report kama nile appraisal, wachana na mambo ya assets and liability. Wewe fanya tu hizo mbili. Because profit and revenue hapo ndio itakuwa determinant. So let's have here, we have to comply. You have to comply. So you leave sufficient space for the first age, because hapo tutaenda kupatiana narrations. So just leave a good space. Then we bring the segments. So segments here we have retail. We have retail. We have catering. Manufacturing. We have publishing. We have others. Adjustments. Then consolidated. Yes. So have them that way. Shillings are empowerments. So using your ruler, you can, you may make lines. If you don't want, see a must. So, but for beauty, for beautification, it's not a must, but you may have it here. So have that. I tend to believe. Now, if you find a ruler, next, you must, good handwriting. You cannot justify a goal. We only have neat handwriting. So you must present your work neatly. Neat. Unaweza kazi very neat. Hata examiner anafurahia. Mtu anasikiaga vibaya. It feels very bad kuwekea mtu wrong. Na present kazi vizuri, unaweza mhurumia kidogo. So make sure your work is neat. Haya. So write for me here. Revenue starts. You start with revenue. You start with revenue. So revenue, you give us both external and internal. So you'll start with the external revenue. They never gave. Then you add intersegment revenue. Intersegment revenue. Intersegment revenue. So intersegment we were given nothing, 74, 65, 36, 791, nothing, 56, 63. Then intersegment, whatever you sold amongst yourself, that is your problem. Don't tell us in the consolidated. Consolidated is going to the public. Public should not know what you sold internally. So you will add, but you eliminate, you subtract the whole amount. It should not go to the combined. Can you give me the total of the intersegment? Intersegment, someone with the total? Uh, 49.19. 49.19. 49.19. 49.919. 49.919. You eliminate, correct? Then now, the sum of the two will give you the total. So total revenue, we were given. So bring them, 129,842, 66, 853, 39, 495, 32, 306, 37, 447. Of course, there will be no external, you don't eliminate. So you drop this one. 49,919. You drop it down there. So I want to give you work. So the work I want to give you, you take this minus intersegment, you get external. So I want you to work backwards. So this one is 129,842. This one I don't know. This is 32, 306. That one I don't know. Now I want the three answers. You can just state them. I'll know they are moving in this order. In fact, do this. Bring the four of them. Once you get this, give me the total. So give me those four answers. So take this minus this, you get that. This minus that, up. This minus that, up. You go. Do for me that. Hata hiyo tu peke yake itatuestia sana hizo zingine. Yeah. So I want the 4 answers from you. Time. I will eat your maximum of 10 minutes. So we stop at 9:10. But it depends with the rate you are giving me the answers. Joseph, allow me to trust your answers. Allow me to trust your answers fully. 59,388. 59,388. It has been confirmed. 2704. 2704. 31,784. 31,784. Then total 256. 256. 204. 256. 024. Sorry. 024. So that is what we broke down here. There was no unallocated sales. Coming to the letter upper before total. So for revenue, we are done. Unless one of us has a question. Revenue too, you sometimes waste a lot of time. So we go straight to profits analysis. We go to profit analysis. For profit analysis, we have been given operating somewhere. Operating profits. We have been given operating profits. So operating profits, I'm seeing there 6887, 6887, 4716. There is 1283. There is 1169. There is 3284. Can you add, but don't post, just add and tell me the answer. Don't give the total first. Just add, please. Just add. So Joy is giving 17,339. So of that 17,339, subject it to note number 3. Check note 3. Intersegment profit amounted to 4223. So of that total of 17,339, there is profit which came internally of 4223. So you eliminate here 4223. So out of the 17, 4223 is an internal profit. So you bear it out. So subtract, take the 17,339 minus 4223 and tell me what you are getting. You are getting 13,116. 13,116. So now what happens? I saw sometimes Kitambo for 2018 and the rest. Some people were invading. They were invading the consolidated books to bring now other items like finance cost, finance income. Then they bring them here. Some of those finance cost, finance income, they have been taken into consideration to get this intersegment, whatever, this one here. So we don't invade, don't even touch that consolidated books at all. Don't pull items from, because as I was unique segment, you go there, pull them, then you bring them. No. In fact, reconciliation will reveal. When you're doing reconciliation, you remember they should be tallying backwards there. So what you get here is final. Hakuna mambo ya kuinvade. So 13,116. And this one here should be your profit before tax. Before tax. Once you have eliminated these items here, what remains should be your profit before tax. Don't go to the consolidated books. What you have here should tally with what is the other side. Without doing the reconciliation. You go to the assets in that order. Go to the assets. Go to the assets. Identifiable. Identifiable assets. Then unallocated. Unallocated assets. So I'll say maximum we can go is up to 910. So identifiable, check C. 50. Jipange hapo na answers. 50, 152, 45, 145, 24, 620, 14, 165, 23, 829, nothing for elimination. Give me the total. Add the assets across. Someone is getting how much? Someone is getting how much? Can say from Matthew 157. 157, 911, 157, 911, confirmed. Then unallocated, you take them to the far end. I'm seeing unallocated, check C, additional information C. C, really C, yeah, C. Hapo kwa assets, there is investment in associates. Investment in associates is for the company, not departments. So 764. Like that. So total assets, just add for me the total. These ones are okay. Add for me the total. 157, 911 plus 764. We are likely to get 158, 675. Thank you. The last one is liabilities. The last one is liabilities. The last one is liabilities. So liabilities, we have identifiable and unallocated. Identifiable and unallocated. Those two. Add the word liabilities. Identifiable liabilities and allocated liabilities. Those two wordings. Alright, there you are. So liabilities, tukipost, weka kwa calculator, ukifika mwisho uko na answer. So 14,839, 97, 83, 3609, 4704, 34, 175. Give me the total. Then unallocated liabilities, we don't have. Oh, that one. Some. But they don't have those unallocated. 67, 110. 67, 110. So total liabilities is 67, 110. So I could have even closed this one. I did not require unallocated. It was not there. So our segmental report ends at that stage. So how will the examiner mark this? For the 10 marks, 10 marks is here. 1, 2, 3, 4, 5. They mark this total. Usually it's also hakuna. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 3, 4, 5, 6, 7, 8. 28. So any 20 at a half. So you get 20 correct entries, you get the 10 marks. So for the remaining 4 minutes, I can do reconciliation. Any moment wanakupatianga hiyo consolidated, in Roman 2 kunakuanga na reconciliation statement. I tend to think examiner aliona hii kitu itakuwa na marks mingi. So write down there, reconciliation statement. I want to delete this. Reconciliation statement. Right there, reconciliation before I delete. Reconciliation statement. And they want us to give reconciliation for 4. 4 of them. For 4. So reconciliation means the segment should tally with the consolidation. For reconciliation, they want us to reconcile revenue. So right here, revenue. They want us to reconcile. So revenue shillings are in thousands. Profit stock loss. Shillings are in thousands. They will want us to reconcile also the assets. Shillings are in thousands. They want us to reconcile liabilities. Shillings are in thousands. So, we have retail catering, manufacturing, publishing, others. Yes. Others. Lynn, wewe ungeenda kwa hii kampuni, which department will you prefer? Wake, which department inakaa ina maneno mingi? The one which cannot give you a lot of stress, which is the best of those 5? Yani mzuri ya kufanyia kazi. Well, others, but others without knowing what they are. So you give first of all your report as per the segment. We want to check whether it will tally with the consolidated. So in your segment, total, I'm checking the revenues. This was 129. Check your totals. 842. Catering 66. 853. Manufacturing 39. 495. If there is one I've not written correctly, you tell me. Publishing 32. 306. Others 37. 447. This one comes to 305. 943. Please make sure you are seeing whatever you are writing, where they are coming from. Those are the totals. So even the profit, also you give the total. This is 6887, 47, 16, 12, 83, 11, 69, 32, 84. Confirm if it is 17,339. Assets 50, 152, 45, 145, 24, 620, 14, 165, 23, 829. Liabilities 14. So this one you will check whether it is 150. No, I remember you gave me 157, 911, 14, 839, 97, 83, 3609, 47, 04, 34, 175, 67, and 10. Yes. Those are the figures you gave me. So kila mtu apige hapo kwanza. From there, maximum 2-3 minutes. We check reconciliation, then we are done. So have those figures passed. I tend to believe that you are there. I tend to believe that you are there. So here you bring intersegment, stroke, unallocated. So if you are accurate, once you bring this to those figures, you should get, if you are accurate in your segmental, you should get as per the financial statements, the consolidated financial statements. As per the consolidated financial statements, they should tally. So intersegment revenue, so nyinyi mtakuwa mnaangalia mnaniambia yes, no, yes, no. So intersegment revenue was coming to 49,919, the one you gave me. So intersegment we do subtract. So when we subtract 305 minus 49, you gave me 256,024. So can you go, now we are confirming, can you go to the consolidated P&L, check the total revenue, whether it is this one here? Can you confirm? You tell me yes. If it is yes, then it has reconciled. Go to the consolidated P&L. Check the consolidated profit stock loss. Consolidated profit stock loss. It is 256,024. Yours what? Yes. So you write down here, reconcile. So that one is in order. Higher. We go to profit. Intersegment profit was coming to how much? Was it 42.23? Was it 42.23? I believe so. So when you subtract, it was coming to 13 something, 13,116. So this was coming to 13,116. And remember, this one was supposed to be profit before tax. Once we maliza your profit your segment, what remains should be profit before tax. So can you confirm in the consolidated profit account whether profit before tax is 13,116? Confirm whether the profit in P&L is 13,116 just by checking. If not, then it has not reconciled. It means we did the segmental wrongly. So it is in order. Yige, yes, it is in order. So that one also reconciled. And here we had unallocated. The one for investment, 764. So unallocated, you add. Unallocated, you add. And we were getting 158 something. I don't know, it was coming to 158 what? 158, 625. Thank you. 158, 625. Can you check the total assets in the balance sheet consolidated? Total assets in the consolidated balance sheet. Total assets in the consolidated balance sheet. 158, 675. Or even this one is 675, sure. So if you check the consolidated assets, the same. So this one also has reconciled. Liabilities, there was no unallocated. So this is 67,110. So go to the balance sheet, we check liabilities. Okay, equal story mingi. Your liabilities, I know what we can do. For the liabilities, I hope you are in the consolidated balance sheet. So what you do for the liabilities, check the total. 158,675. 158,675 minus equity. Equity hapo juu utaona 91,565. So can you subtract? Take the total equity and liabilities, then subtract equity so that you remain with the liabilities. Niambie kama itakuja hii. 158,675 minus equity, which is 91,565. So subtract so that we remain with the liabilities. And tell me whether you are getting the same. Yes. So that one also reconcile. So in case the examiner will tell us to do reconciliation, that is how we do the reconciliation. You bring them as per the segment, you eliminate intersegment, then you confirm with your ingine. Ikikataa kubalance usiseme that it does not reconcile. That is wrong. Unachana nayo, you keep quiet. You keep quiet properly without interfering. So when we meet next, which question should we be bothered with? I don't know. There was a question in pilot paper. There is a question in pilot paper. December 2021, if I'm not wrong. This one here. So when we meet, we shall be checking December 2021. December 2021, question 3A, pilot paper. That will be our next question. Otherwise, do have a nice Sunday. It has been long since 5:30, but we have come to the end. But we are moving on well. So when we meet on Thursday, God willing, my target will be to finish the segmental reports so that on Saturday, I can determine whether to start on the group accounting on that Saturday. So Saturday and Sunday again. Perfect. So thank you so much. Do have a nice Sunday. We meet next.